Hello everybody, welcome to Sir Chua's Accounting Lessons PH, and today's problem solving technique is a sample problem about shareholders equity. So before anything else, please download the handout and the link is available in our description box. So if you have downloaded it, then let's start. Minzy Corporation has the following partial capital structure as of January 1, 2023. So take note of that. At the beginning of the year, those are the balances. So we have ordinary share capital, ordinary share subscribe, and your preference share capital. And then it also gave you information about retained earnings at the start of the year, and then a declaration of a 12% stock dividend, which was then distributed after 3 months. And then you also provide current dividends on preference shares. And there are no dividends in arrears at the start of the year. So everything is paid. And then retained earnings at the end of the year was already given to you, amounting to 456,300. And the fair market value of the ordinary share at the time of the declaration of the stock dividends is 95 pesos per share. So question number 1, how much is the ordinary share capital at the end of the year? And for the account share capital dividends distributable, how much is that? Also, to be presented in the financial statements, and then net income that was earned by the corporation for 2023, and the total shareholders equity of the corporation for 2023. Okay, so this is a bit complicated, so let's do it one by one. Let's analyze it line per line. As you can see, ordinary share capital says that it's 20,000 shares authorized directly with the amount of 640,000. We need information about your shares issued and outstanding. So I'll first write here your ordinary share capital of 640,000. However, the only thing that was given is the number of authorized shares, and we don't need that. What we need is the number of shares issued and outstanding. And if we have the par value, it's easy. You just have to divide this to your par value, then that's it. However, we don't also have information about your par value. Let's try to look at it further in the problem in the next line, which is ordinary shares subscribed for 5,200 shares, which is 416,000. Remember, during your subscription of shares, you debit subscription receivable at the subscription price, and then you credit ordinary shares or preference shares subscribed at par value. Since it gives you information about that the amount of subscribed shares is 416,000 for 5,200 shares, then that actually represent, or can represent rather, your par value. So let's have it divided. Okay, so your ordinary shares subscribed, which is actually 416,000, you divide it by 5,200 shares. You can actually get here your par value. Okay, so 416,000 divided by 5,200, your par value is 80 pesos per share. Next, so if we already have the par value for your ordinary shares, if we now divide this to the par value, we can get the number of ordinary shares issued and outstanding. Okay, 640,000 divided by 80, that is 8,000 shares issued and outstanding. Okay, we will be needing these information actually later when we deal with your stock dividends. Okay, next is your 12% preference share capital. I'll just put here TSC, which is 25,000 shares authorized for 75 pesos par value. So in this problem, actually, the preference shares is much cheaper than the ordinary shares. I don't know why. Let's just do it. Okay, anyway. So it gives you 500 62,500. You can divide it directly to your 75 pesos par value. And what you get here is 7,500 preference shares issued and outstanding. So, what's the moral of the story? Even if the par value or the number of shares issued and outstanding is not directly given in the problem, as you read the problem, you can actually get it. Okay? The problem is actually not silent. You just have to look for it in full detail when you read and analyze the problem. And that's how accounting problems actually work. And that's what make it a little challenging. So you have to be acquainted with those kinds of analysis techniques. Okay. Now that we have analyzed the upper portion of the problem, let's now start analyzing what the story tells us. The first one is retained earnings at the start of the year amounts to 456,000. We need that later. And then during the year, the board of directors declared a 12% stock dividend on ordinary shares, which were then distributed 3 months after. Let's have a review of the two kinds of your stock dividends. We have your small stock dividend, which is below 20%, and your large stock dividends or large bonus issue for 20% and above. So it is safe to assume that the small is like 1 to 19%. Okay? So your threshold is just basically 20%. So if it's 20% or more, that becomes large. Now, if your stock dividends are small, you use the fair market value of the shares at the time of the declaration of dividends. But if the stock dividends is deemed large, then you will only use the par value of the shares. And even if your fair market value information is given, you just have to ignore that. Now, in our problem, it's actually 12% stock dividends. So 12% stock dividends. Since it is 12%, that is deemed a small stock dividend. So now let's try to do the entry for it. What's the entry for a stock dividend declaration? Debit retained earnings. And you also give credit, or you put credit on stock dividends payable or stock dividends distributable. I hate using stock dividends payable actually because it sounds like a liability when it's actually not. Basically, stock dividends distributable is also part of your equity. Okay? And then, since we will be using fair market value here, and then for stock dividends distributable will be your par value, then you can expect that there will be a premium in this transaction. So we also give credit to your ordinary share premium. So how much is the amount that we will be debiting to your retained earnings? How many shares do we have for ordinary shares? 8,000 shares. So for RE, 8,000 shares multiplied by the par value, which is 80 pesos. And then you get the 12% stock dividend. Since that is a small bonus issue, you will be using the fair market value. So instead of 80, we use not 80 but 95. Okay, you see the difference? Okay, we don't use 80, we use the fair market value because it is a small stock dividend. We instead use 95. Okay, so 8,000 times 95 times 12%. That is 91,200. So you debit retained earnings at the fair market value of shares at the time of the declaration of dividends, which is 91,200. Now, for your credit for stock dividends distributable, you have to use your par value. So for your SDD, 8,000 shares and then your par value of 80, and then 12%. So 8,000 times 80 times 0.12, that is 76,800. So credit 76,800. Now the difference between the two will be your ordinary share premium. So 91,200 minus 76,800 is 14,400. Now the problem tells us that basically it was distributed 3 months after. So let's just do the entry to distribute this. Debit stock dividends distributable for 76,800, and then you credit ordinary share capital for 76,800. Okay, that's it. Next, current dividends on preference shares were also distributed. Okay, so let's perform that as well. Okay, so we have a debit again to retained earnings, and then credit cash dividends payable. For how much? So a debit to your RE would be basically your just your current dividends for your preference shares. So your preference shares is actually 7,500 shares issued and outstanding multiplied by 75 pesos par value times the dividend rate for your preference shares, which is also 12%. So 7,500 times 75 times 0.12, that is 67,500. But the problem tells you that it was also distributed. So you distribute this debit cash dividends payable for 67,500, and then you distribute it as cash or credit cash of 67,500. Okay, there were no dividends in arrears at the start of the year, and then so no problem with previous year's dividends. Retained earnings at the end of the year is 456,300. So the beginning earlier, which is 456,000, and then the ending, which is 456,300, is given to you. So usually take note of that. If the beginning and ending balances is given in the problem, then I think the problem will be asking something in the middle. Stay in the middle like you. Okay, and then and then that's the last line there. The fair market value of each ordinary share at the time of the declaration of dividends is 95. So we have used that already earlier. We are now ready to solve your problem. Okay. In dealing with transactions involving shareholders' equity, it's very important to know the transactions that has transpired and how it affects your total shareholders' equity. Okay. Now, my starting point usually in these kinds of problem is I put all of the beginning balances available and then adjust them with what and anything and everything under the sun that has happened, and then get the ending balances so that it will be easy for us to get the ending balance of your total shareholders equity. Remember, questions in corporation accounting and shareholders equity will always ask you about the ending balance of your total shareholders equity basically at the end of the year. So just always be ready on that, okay? So I will be writing first the beginning balances. I usually do it like this since I was teaching this 5 years ago, okay? So let's start with your ordinary share capital as given to you in the problem, that is 640,000. Okay? And then you also have your ordinary share subscribed, which is 416,000. Expect that there will be an ordinary share premium, although there's none in the starting point. And then your retained your 12% preference share capital, which started at 562,500, and your retained earnings at the start of the year, which is 456,000. Actually, if the problem asks you how much is the beginning balance of your total shareholders equity, this is actually the answer. You just have to get the total of this one. Okay. Then, what I always tell my students is, coming from the starting point, just book all of this. All of the effects that has happened. That's the secret. Okay? So, if you debited retained earnings at 91,200, so declaration of dividend, so minus 91,200. Okay? And then stock dividends distributable. So I will put here your SDD of, this is starting point, okay? So 76,800, and then credit ordinary share premium for 14,400. Okay? But since your stock dividends has already been distributed, so debit stock dividends distributable for 76,800, basically the effect is slashed out already, right? And then you have a credit on your ordinary share capital for 76,800, so what you will do is add it here. So for your ordinary share capital, 76,800. Then another debit to your retained earnings for 67,500 for your preference dividends, and then credit cash dividends payable for 67,500, and then so this is a liability, and then cash dividends payable for 67,500, which was also paid 67,500. Now the thing here is your retained earnings, always remember, is the beginning balance of your retained earnings is also affected by the earnings for the year. It's not actually mentioned in the problem about your net income during the year. And remember, that is being added at the end. How much is the net income for the year? And it will eventually go to your retained earnings. So you put X here. That's missing. Because we have in your problem the ending balance of 456,300. So that is your missing link. And you always should remember that. We are now ready to answer your questions. Number 1, the amount of ordinary share capital to be presented on December 31, 2023 statement of financial position is basically only this one. Okay? So 640,000 plus 76,800, 716,800. This is the answer for number 1. Number 2, share capital dividends distributable to be presented on the statement, on the financial statements, amount to by how much? Actually, even if you don't perform all of these analysis, if you use theoretical thinking, because it was mentioned in the problem that the stock dividends were already distributed. So basically, that amount, or that account, sorry, of your share capital dividends distributable, it's already distributed. So the answer is actually 0, and that is your answer for number 2. Since it was already distributed, the answer is 0. Number 3, how much is the net income earned? Sorry. How much is the net income earned by Minzy Corporation for the year ended December 31, 2023? This is what I'm telling you. Okay? The problem asks for the net income. We have your beginning balances, the dividends that you declared, and the ending balance. Where is the net income? For your, sorry, to make it more understandable for you, let's make it on a more formal accounting form. Okay, so retained earnings at the beginning of the year, 456,000 plus your net income, which is missing, so you put X there because you miss your X, and then you deduct your dividends declared. Okay, I'll add them both, 91,200 and 67,500, which is 158,700, which is your retained earnings at the end of the period, which is 456,300. Squeeze technique, working backwards, we have to get here. So 456,300, add back 158,700 minus 456,000. So your X is 159,000. So this is 159,000, and that is your answer for number 3. And the last one, which I've told you earlier, how much is the total shareholders equity for Minji Corporation at the end of the year. So just complete all of your ending balances. Nothing happened for your ordinary share subscribe because there was no issuance yet of these shares to the full payment of those subscribed shares. So that remains 416,000. This happened with your OS premium, 14,400. I'm sorry, I put this here. Okay, so this is the answer for your net income. And then your preference share capital, the only transaction that has happened is the dividends for preference shares. Nothing has changed for your preference shares. And that's also 560 to 500. And then, we don't have SDD anymore because it was already distributed. And remember that the problem has already told you that the ending balance of your retained earnings is 456,300. So, this is your total shareholders equity. Okay, so I'll put it here and just add them. 716,800 plus 416,000 plus 14,400 plus 562,500 plus 456,300. Your total shareholders equity amounts to, so I'll put this here, total shareholders equity. Total equity is 2,166,000, and that is your answer for number 4. Shareholders equity questions are actually a bit complicated, so I hope that this video will be able to help you to at least get some techniques on answering problems in corporation accounting. More so for our basic accounting students who's performing corporation accounting, and for intermediate accounting students who's getting it in the shareholders equity part in your intermediate accounting. Okay, so that is our discussion for today. Thank you and have a great day.